Welcome to the Zawya podcast. I'm Imogen Lillywhite, and today I'm talking to Matt White, who was appointed CEO of Dubai's Virtual Assets Regulatory Authority, also known as VARA, in November. VARA is relatively new. It's 2 years old, launched in March 2022, and the virtual asset sector itself is new by some standards, emerging over the past decade and a half. VARA is a pioneer in that it's the first independent virtual assets regulator. The virtual asset sector has had its ups and downs since the years since it began to emerge, but the SEC's approval of Bitcoin ETFs in January felt like a turning point in crypto adoption by trad finance, and with Bitcoin nudging close to its all-time highs as we record this, it feels like interest in the sector has never been greater. Let's talk to Matt about VARA's role and what it means for the growth of the virtual asset sector. Welcome to the Zawya podcast, Matt.
Thanks, Imogen. Delighted to be here.
Let's jump in with my first question. What is VARA actually responsible for? Which businesses and which asset categories?
Okay, so VARA is the sole regulator for all virtual asset activities in the Emirate of Dubai, and that is a pretty broad remit where this type of thing is concerned. It is responsible for setting policy, for setting regulation, licensing, supervision and monitoring activities for all entities that want to operate in or from Dubai in respect of virtual assets. And this has been deliberately set up in an activities context. So there are 8 activities which all can be found on the website, but they range from advisory services to exchange, custody, asset management services, and a couple of others as well. All of that's on the website. It's quite essential for us to cover a wide spectrum of participants, and as I said, it's deliberately broad. You'll see some regimes outside of the UAE that are product focused or token focused, so they might regulate a cryptocurrency but not what they're calling an NFT, for example. That's a different way of approaching it to VARA. We've gone activity based, deliberately broad, and we feel that that's the kind of the best way of looking at this in the current context. The definition of virtual assets is again very broad in this context. It encompasses all types of digital representations of real world assets. So that could be a currency or cryptocurrency, it could be a stable coin, it could be a digital representation of ownership, or an NFT as they call it. It's an extremely broad definition overall, and VARA is responsible for the regulation of all aspects of that for the Emirate of Dubai.
Why is it so important for Dubai to have its own regulator instead of letting virtual assets businesses fall under the Securities and Commodities Authority, for example?
Yeah, okay. So I can give you a personal view on that. The decision to set VARA up predates my involvement with the project. So I'll tell you what I think. If you look at some of the recent crypto reports that have been issued, the research reports, the UAE has one of the highest crypto adoption rates in the world, and Dubai is sort of the engine room for accelerating this adoption. There are over 1,000, and it's probably much more than that actually, but certainly over 1,000 entities in the Emirate of Dubai that have been set up that relate to virtual assets. And my view is that it's fairly essential that there are frameworks in place for these VASPs looking to set up in Dubai. And if you also look at the global context, there isn't really a specialization around virtual assets, and the nature of the technology, it being very dynamic, very kind of novel in its own right, I think it's essential to have that sort of specialized regulatory framework in a region, in an environment where you've got such a large concentration of this type of entity, of this type of activity. It's absolutely important, of course, to align with the ESCA and other federal regulators on the minimum standards for the regulation, so that we don't get sort of regulatory arbitrage between the different regulators that exist. But I think in the context of Dubai specifically, it warrants a specific regulator and regulation to look at the entities there.
So if you set up your virtual assets business elsewhere in the UAE, you'd still be under ESCA. That's right, isn't it? So
yeah, sort of. If you set up your entity from Dubai, then you are able to access consumers across the UAE. There is a passporting between VARA and ESCA, and vice versa as well. So if you set up outside anywhere else in the UAE, then you will be initially licensed by the ESCA and passported into Dubai, so long as those minimum standards are met. And I think that's the really, really important piece, this commonality of the minimum standards that are required to be able to do that passporting of licenses.
It's only been 2 years, but can you talk about the key milestones for VARA so far? What has the authority achieved so far?
Yeah, okay. So I would sort of say there are 3 or 4 really key milestones for VARA. One is the establishment of the regulatory body itself. It's the first regulator that is dedicated to the virtual asset sector, and I think VARA has solidified its position as the sort of leading body in this domain. So that's number one. I think it's a kind of really important milestone. Number 2 is the introduction and completion of our minimum viable product regime, and that was designed to engage with and build the full regulatory framework based on participation from the private sector and global entities to understand their behaviours a little bit more closely without endangering the retail market, and then subsequently issuing those full market regulations a year later. So we've had those for about a year now, and that whole kind of process of the introduction of MVP through to the evolution into FMP, I would say, is the second big milestone that we've achieved. Number 3 for me would be around the licenses themselves. So we have granted 20 regulated virtual asset service provider licenses. 11 of those are operational, and we've granted a further 80, I think, initial approvals, which essentially grants the entity applying the ability to be able to go and set up commercial activities within a free zone or within mainland, and get banking services, that type of stuff. So I think that is also a fairly significant milestone for VARA as it stands. And I suppose I'll bring the 4th one in. It's not VARA can't take credit for this, in its own right, but the recent kind of FATF removal of the UAE from the grey list, I think, is a really, really positive UAE step to which the comprehensiveness of regulations at both the federal and local levels around virtual assets has been a contributor as well. So I think number 4, I think we should see that as a key milestone, and it will probably remove the brakes on some of the investment coming in around virtual asset activities at the moment as well. So that's how I would look at it. 3 or 4 key milestones for VARA so far.
Can you tell me what's going to happen this year? What can we expect in terms of expansion or growth or new initiatives, that kind of thing?
Okay, so the market is coming out of a relatively quiet period. Last year was a tough, was a tough time for the crypto market. I think a lot of people were calling it the crypto winter. We're coming out of that now, and I expect to see quite a bit of investment in the space again, which in turn will drive activity. There is going to be expansion into new initiatives, but I think it's worth highlighting that the baseline expectation will be to cement, these robust supervision and enforcement frameworks that we've built, so that we don't go backwards from where we currently are. So that is absolutely top of priority. But I think there's probably three areas where I think you can expect progress or enhancement. And the first of those is what I'm calling sort of virtual asset infrastructure. So what I really want to be able to do is cement the kind of baseline VASPs and products and services that you need for a functioning ecosystem in this area. So what I'm talking about there is the right exchanges, the right brokers, the right custodians, and enabling them to have the right suite of products to service a crypto market. So spot trading is one, but we potentially want to move into derivatives trading and earn products as well, which you're probably hearing about globally. For me, that's the infrastructure upon which sort of everything else that we can do is built, and that's number one. Number two is the innovation layer on top of that. So there are a number of key innovations that we're starting to see when we engage with industry participants, and you'll be able to see this in the kind of in the media and other sources as well. But a good example might be real world asset tokenization. So there's this huge kind of drive towards tokenizing real world assets. I would put something like that in the innovation bucket. And what I want to do is, rather than VARA go away and sit in a room and build a regulation around, say, tokenization of a bond or of a carbon credit, I want us to work with industry participants on very specific proof of concept or pilot exercises. So we might say, let's find a VASP that wants to tokenize a fund, and let's pull in all of the different potentially regulatory bodies or financial institutions in order to do that, and let's figure out what a regulation around that might need to look like in conjunction with all the relevant stakeholders. So rather than us doing it in our own right, we would go out there and build something that actually works using proof of concept. So that VA innovation layer is the second part, and then the final part is sort of a wrapper around all of that in terms of what we'll do next, and it's an enablement layer. So there are still some things that the ecosystem needs that are not working 100% to where they need to be. So access to banking would be a good one. The central bank and the local banks have done brilliantly, in my view, in terms of coming to the table, enabling institutions to start off offering banking services to VASPs. But I think there's an education gap at the moment in terms of risk, and I'd like to see some progress on really helping those institutions understand the risks and therefore making more comfort in dealing with these virtual asset service providers. So that would be one example. But also this cross-regulator collaboration is something that's important from an enablement perspective as well. The relationships with ESCA and central bank are very good. I want to make sure that they improve in strength, but also looking globally at extraterritorial relationships with other regulators as well, recognizing the fact that this is a borderless technology. We can't ignore the fact that entities setting up here have the ability to operate offshore, and if we haven't got that information sharing in place with other global regulators, then we're not going to be able to achieve our goal.
If I could pick up on a couple of things you mentioned there. You mentioned banks. I spoke to someone from Citi's Future Finance Department who said there is a sense that this is the year of here comes the institutions, i.e. the big institutions are now really getting involved when it comes to virtual assets. Does VARA have a role in connecting large financial institutions such as banks to virtual assets providers?
We have a role to play in facilitating or helping the industry to grow within the Emirate of Dubai. It's actually in the law. The law goes beyond regulation in the sense of VARA's objectives. We have an objective to bring in institutions to the ecosystem, because they form an important part of this complete ecosystem that I talked about, whether that's because they want to tokenize some of their products or whether that's because they bring liquidity into trading markets or whatever it is. they play an important part. And so yes, we would like to facilitate the introduction of those institutions as well. And I think that's back to your point around the ETF, the Bitcoin ETF, and the price going up. For me, yeah, price is going up. That's great, fine, but that's not really the interest for me in that. It's how many institutions are getting involved in this and how quickly. And that's the bit that I want to watch evolve over the next few months, just to see what that interest peaks at or what it looks like. That's the really interesting bit about the ETF from my perspective.
Anything that mentions the value of Bitcoin is just it's a ratings monster, if you will. So there's obviously a great deal of interest, obviously, because people are invested. And as soon as people hear I'm writing about cryptocurrency or virtual assets, they get their phone out and they go, oh, I'm just going to see the price. It's a really interesting how people behave around it. And they wouldn't do that about a share. No one's getting their share portfolio out to show me, look how well Microsoft's doing today. It's just not happening. So I think I've discussed this with big institutions as well. Because it's so new, there's still this huge excitement around it, this great interest in what's happening with it, how's it performing. It's like uncharted territory for them, even though we've been through cycles with Bitcoin. But it's irresistible to people, I think, the interest that they have in that price. So
yeah, I agree. You can't stop looking at it. It's on the front of my phone as well.
Yes. But you don't if you had a share portfolio, you'd be like, check it once in a while, right?
Yeah.
But it's irresistible. If you're from a sort of trad finance background, decentralisation is a difficult concept to get your head around because it sounds like not regulated. But can you talk a little bit about what it actually means? Because I can tell by your face that that's not what it means. So can you tell me what it means?
It's not that that's not what it means. It's just that it's a very complicated question.
Yeah.
I think. So what it means to me, the way I try to think about this is that in essence, the platforms that are the technology platforms that are enabling these virtual assets to exist, and I mean that in the broadest sense. Again, not just cryptocurrencies. I think that's quite important. These platforms are designed so that many of these platforms are designed so that no one entity, whether that's an individual or an organization, can prevent a transaction from happening, essentially. So that's what that's really what the concept of this means. And it does that in a very, very clever way. It's all very, very mathematical. The challenge that you've got with decentralization is that some products are more decentralized, so some chains are more decentralized than others. I think the general consensus would be that the Bitcoin blockchain is the most decentralized, probably why the SEC in the US has decided that Bitcoin is not a security because of that level of decentralization, and then you have this kind of scale or level of centralization that happens with some of the other chains, and that could be anything from the fact that you've got a concentration of validators or nodes in one data center owned by one individual, or there's a whole bunch of reasons why you can get less and less decentralized. It doesn't have to be like that, of course. So you can have blockchains that are private blockchains and centralized, and some of the banks and institutions are building those so that they can run similar technology which is immutable and private and transparent, but they have control of it. And there's trade-offs that you have in each one of those scenarios. So it's not surprising that institutions are struggling a little bit with that kind of lack of control. It's very, very unfamiliar to a lot of these companies, as how that works, how you then integrate that with what are very centralized legacy systems. It's a hard problem to solve.
you've touched a little bit on this already, that VARA has a dual role. You're there to regulate, but you're also there to attract virtual assets businesses to the Emirate. Can you talk about that and what that actually means, what that means in practice?
Yeah, it's a very good question, actually. And so I'll go back to the point I made originally, which was the objective in the law goes beyond regulation, and there's kind of three other parts to that, I suppose, if you look at the law. One is to promote the Emirate as a hub for virtual assets. It's one objective. One is to increase awareness and education. That's something that you and I have talked about, and the importance of that. And the third is to support investment attraction into the Emirate as well. But what I suppose the important piece to this is that we do this through regulation and regulatory powers. So, for example, many organizations and investors want to be regulated. They want to be regulated because it provides certainty for their business to operate, and investors and many organizations like certainty. So we would enable innovative products by, first of all, understanding them. And we have many kind of public-private organizational discussions around that. But then for those that appear to be sort of super important for the industry, tokenization, we keep coming back to tokenization, but that would be a good example. We'll look at how we create some certainty and clarity around what an organization can and can't do within the Emirate. And in doing so, we attract people that want to invest and people that want to come here. So the objectives exist beyond regulation, but we enable it through regulation, and that regulation is really the fundamental part of what we do. It's nothing beyond that. It's not like there are conflicting objectives. It's that one enables a greater remit than you would normally have on its own.
So yeah, you sort of anticipated my next question are they conflicting? Because if you're trying to bring in businesses, is there a drive or a particular push to achieve this many businesses, and might you then therefore not be that as interested in the paperwork as you might be, but I guess not.
No, I don't think so. And the reason for that is that the influx, the attraction is as a result of robust regulation, it's not the other way around, if that makes sense. We're not creating that regulation in order to, we're not going out there soliciting business, if that makes sense, and then figuring out the regulation in order to make that happen. It's the other way around. So I would say not.
So last question, which is the hardest one to answer, I think. So over the past year, we've had some interesting times in virtual assets. We've seen some controversy around one Changpeng Zhao, also known as CZ, and Binance, and we've seen charges being brought by the US Department of Justice. But how does that have any bearing on VARA and what you're trying to do here? I mean, do you need to change what you're doing in order to respond to what's happened there? How easy or difficult is it to know that we're getting the right virtual assets businesses in Dubai? First of all, does it impact? Have you had to change anything? And is there any lessons that have had to be learned from that?
Okay, so look, it would not be appropriate for me to comment on regulatory matters outside of our jurisdiction or kind of ongoing applications within the jurisdiction. So I won't do that. But what I can talk about is the regulatory regime here, and I think that will answer your question in what you've asked. So our framework is risk-based. I think that's a really important starting point. And each entity is assessed and grouped according to its level of risk. So we have standard, enhanced plus, for example. And there are various kind of criteria that define where you might sit in that, like how big you are. That would be a good example. And this categorization of risk drives the level of depth of the due diligence that's done. And that could, ranging from just simple validation right the way through to interrogation and interviews, where we have higher risk organizations. So the level of kind of strictness, as you put it, hasn't changed really, but the risk profile of entities can change over time, and we adjust to that risk profile depending on the various factors that might crop up. We also monitor the market for changes in risky jurisdictions. So OFAC, the FATF, they are constantly issuing updates and guidelines, and that gets fed right back into that framework, right? So I think the key point here is it's risk based, and the risk of the entity can change, but it doesn't really change what we've already done or what we've done up until now. Your other question was about how difficult it is. You're absolutely right. It is difficult to know which are the right businesses to bring in and to allow, and that is hard with a nascent industry that is changing very, very kind of frequently. This is why we do a very thorough business model assessment up front. So we spend a lot of time understanding the nature of the business. Those reviews that help us make decisions about how we proceed or whether we proceed to the next step, or what mitigations we expect or we ask to be put in place in order to manage the risk. So it all comes back to that risk. I mean, it's conceivable that there are some risks that can't be mitigated or managed, but generally there are mitigation strategies that you can put in place that will satisfy most of the criteria that we have. So that's how we deal with it.
Okay, you mentioned something called an interrogation there, but I'm guessing that's a term that you use to describe something that's not being sat in a room with the light shone in your eyes.
Correct.
So
yeah.
What's that? Tell me about that.
So what I'm talking about is the level of depth that we would go into in an assessment. So that could be as simple as a validation of a trade loss. So the simplest form would be you've given us a document and we validated that is a valid document. The next level of depth would be, say, investigation. So we might pull in third-party sources, and we might have a look at third-party information in order to verify something, or we might ask for additional information in certain areas. And the kind of interrogation bit that I mentioned is, it's not a light shining in your face, but what we would do is a much more in-depth set of potentially interviews with directors, cross-checking and validation of the information that they provide. All of the above would be where we sit. But that's what I mean by interrogation. Just a much more enhanced level of due diligence on some of these things.
It's been really fascinating, Matt, and it's going to be really interesting to see what happens with VARA and the crypto space and the virtual asset space in the coming months and years in Dubai and around the world. Thanks for talking to me.
Thanks for having me.
You've been listening to the Zawya podcast with me, Imogen Lillywhite. Please join us again next time.